Welcome to TradeTheNBI.com. This channel's report is for the 24th, and well, we didn't see a whole lot of action of significance other than the big drop down that started early on pre-market that was pretty much bought up throughout the day and finished at its highs. So still retesting these areas, and again, those keys, that 61% was right there at 2709. It was interesting because from an intraday standpoint, we were looking for a retrace down to that level from previous dips below the red line, and it satisfied that only to move back up. Now, the damage though to that shakeout, now we're negative shakeout for the first time, though you can see a little bit of a rising gold, and that's significant because when above the 50% and you have rising gold, you tend to move towards the 100% level. So at the same time, we're finally seeing green crossing into decaying red. Short-term buyers are completely fading this, but shorts aren't exactly super excited. They're barely above zero. So it's kind of a malaise right now, sort of flattening out after all the early excitement of earnings. And the NASDAQ, slightly better, hasn't moved to negative shakeout yet, but very close to doing the exact same thing. And short-term buyers are even weaker with the steel completely breaking down. But this is going to give a nice reset. With the orange all the way up here, though, we're not seeing any significant algorithm activity, and that's critical. We talked about the euro here, no reason for them to sustain it, heading right back into that range that we talked about before with the European Union situation in flux, as I guess the best way to describe it. Adds to the systemic risk, and that's just keeping the euro soft, and without support of our central bank in the U.S., euro's free to go back down towards a reasonable level, if you want to call it that. TLT, kind of a shock. This was a bit of a bounce move that I don't think a lot of people were expecting, that caused it to be even more severe. You might call it a risk-off trade in that, but in this particular case, it's certainly adding to the problematic mix about where interest rates are headed and the broader economy. Particularly USO still remaining very elevated. We've got a lot of positive extremes to pay attention to. So a lot of this is going to get filled back in on a sell signal. We just don't happen to have that right now. We're starting to see the start of something taking place right here as the orange is breaking above 13, steel negative 13, a little bit of short rise, but not enough to create a DOC spread where the cyan shorts rise above red. So probably going to trade a little bit across for a bit, and a lot of stabilization in gold here. Just a lot of damage with that shakeout below 22 means no, not really ready for a bounce just yet. Let me shrink this. Was the intraday action. So for the 5K, we started from the day, and that was like the pre-market early dip. Created a tiny little buy. No dip below the red line, so once it reached those lows, there was no need for it to have to come back to them. Did get overbought, well, not really overbought, but extended in the sense that the algos weren't quite strong enough to kick something in, but it was sufficient to allow for that DOC red and rising green, along with the shorts fading in here. I mean, we went all the way down to minus. I can get the little bar to show up here. We can see how deep that was. There was 622, 697 there, and then 681. So that's gave the little bounce that was needed. It retraced right about in this level, and then popped all the way up to the 50%. But we got gold below the 50%, and that usually calls for a move back down lower. And sure enough, it came all the way back to it. We ended up with a secondary one where we had gold above the 50%, and it dipped below fractionally, but as we know, that's usually pulling for price to move to the highs, and it took a little bit, and right towards the later part of the market, we reached the highs, and then it continued. Now you see all these crazy dots, and you're thinking, what the heck is going on? All right, well, the yellow ones just represent where the extreme is almost reaching a significant algo move, but doesn't quite have enough juice. And then obviously the red dots represent the red algorithm, but from a cyan here, and of course these little numbers that are showing up, those represent when we get the so-called snake, where orange moves above red and steel moves lower. And in this particular case, the one shows up right when you have green below the and those only show up when green is above orange in this particular case. So it creates a unique little field. But what I've found is that even in their rise, it's merely a matter of waiting for that DOC, and then your expectation literally is to fill back all of these, which in this particular case was right to about here, which, coincidentally, is exactly what has taken place here in the after hours market. So it's one of those where even if you're wrong and enter somewhere along the middle, say you want to take these moves of steel below, or where green has dipped below red on a lower shakeout, but I mean, some of that's a little premature because you didn't have a significant move, or one that gets close and you just want to take advantage of it, where the green now is popped below. It would be before the pop, but ultimately it gives you the reward. So it becomes one of those risk to reward. If you do it to where it just starts, then okay, you're not going to have as big a return setup. But if there's enough of a move, it really creates an attractive zone concept. I'm certainly going to be incorporating that in the change of the paint bars. And I'll probably be adding as an input the option for you to add the zone ranges into the Morganacci for next month's indicators. That way you can either just turn it on or off, but it just shows what that overall range from the high to the low is, and just prints it down below when there's a change, just so you can get a gauge as to what the market potentials are within the normal size of a day. We shrunk down pretty good, and when you shrink down, like you can go back and check it on your own. It's not that complicated to see. Whenever you get into these squeezed ranges, it sort of has the similar effect to a Bollinger Band. It squeezes only to expand and squeezes to expand. And that's the general pulse of the market, which is a good way to describe it, back and forth move. In this particular case, we had cyan under red for a long time here, until that did break out and signaled the end of the run, and that took place just a little bit into after hours. It was right about in here. There we had the full DOC spread, nice and clean. And typically you look for that to end. Well, when I say end, the cycle end of it is just the steel crossing above the red. At that point, you have to have the dynamic of continued spacing between your red and green, no buy signal with orange. And then finally closes off usually when you get the steel rising above, if you've got the orange that's already dipped. Now, you can see right here, we already have a deep dip of negative red, so we expect we're probably going to revisit the lows down here. So right around the 2175 range here, so right around the 50% would be reasonable expectation for sell signal, which I'm not really seeing right now. However, even within this buy, if this orange continues to rise, you're likely to get that fade before price turns around and pops. So we'll see if it comes back to that now, or if it's going to have to take place later. But it becomes a good benchmark looking forward. In fact, I can expand this since we don't need to see the rest of the day now that we can get up close and personal with it. There we go. How easy is that to see? So all in all, that's the general pulse of things. We're still not seeing a whole lot of algo activities. We didn't see it until the ending part of the day here when we were starting to make the extreme highs. It was the first time we were getting anything above the plus 13, which that's what's going to give you your volatility, either up or down. When you get the just general sideways in the middle, nothing too dramatic, you get this kind of flat stuff. So it's always worth noting if you're looking for high beta move situation, or to prepare to be into a trade within the soft side of it. I'll put up any charts on the Skype chat as relevant. There hasn't really been anything of significance. I've been doing the programming, so If there is something unique, I will certainly have it up there for you. As always, trade well. We'll talk again later.